What's up, my friends? Kris Krohn here. Today we're talking about real estate and we're talking about accounting because a lot of people want to know, what should I expect and what are good appropriate costs when it comes to doing real estate?
Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
So first of all, the reason why you're probably watching this video is because you're saying, okay, if I'm going to own real estate, I want to know what my real cash flow is, what can I really expect, and what are those unexpected costs? Because listen, honestly, when you hold real estate, you have some additional costs that you do need to be aware of. And when it comes to accounting, guess what? Every day, every month that you hold that property, you need to be doing a number of things. You need to be logging expenses, you need to be depreciating the property and recording the mortgage interest. And some of you are like, whoa, Kris, that's going right over my head. So what I'm gonna do is I wanna actually break this down for you. What I'm gonna do is I'm actually gonna step into my office. I'm gonna invite you. This is my cute little cozy little office. And what I wanna do is I'm gonna actually break this down for you and I actually wanna help you understand what this looks like. So check this out. Accounting, what are the things that you need to be aware of? What are the real expenses? I got my cheat sheets here. A lot of people are like, I own this property, what should I be paying per property to make sure that all of the expenses, mortgage, everything are basically properly logged? At one point, I was paying in a bookkeeping firm like $40 to $50 per property. And when you have a $200 cash flow and you have a $50 cost, it's like chokehold. But if you also have a property and you can get that number down, and so the question today is what's reasonable? Before we talk about that, I actually have a team of freaking CPAs. For my partners, those of you partners that are watching this, I have professional CPA that actually runs this for me. So I want to break this down to you. First of all, number one, there's going to be mortgage. Every single month when you're paying your mortgage, a part of that actually goes towards principal reduction, and then a part of that goes to actually interest, which you can offset and write off against the property. But more than that, to make sure you really fully get all the tax benefits, you need to depreciate the property. Now, depreciation, to help you understand what that means, properties, for example, are allowed to be depreciated over a 27-year period of time, which means that if a property costs $100,000 and I divide that by 27, it's like $2,700 a year is what I get to write off. That means it's possible for you to actually have $2,600 of cash flow that's positive, take the depreciation of negative 27, and on paper, it looks like you lost $100 that year. But guess what? You're actually up $2,600. The accountants need to know how to write that depreciation off. Number three, you're also gonna have expenses. This is a part of the game. You need to be able to take things like property management fees, everything into account. And this is what I was paying $40, $50 a month for. These days, because I buy a property pretty much every single day, I have a team of CFO with their accounting team, and what they do is they step in and they actually do this. Check this out. They charge $50 on the first property, but then they charge $10 for the second. They charge $10 for the third. And right now, bottom line is by the time you get up to 5 homes, it's $50 for the first, then it's $10, $10, $10, $10. It's essentially $90 for managing 5 properties in an LLC. The cost on that for the bookkeeping is $18 a month. Now, look at this for just a second. This right here is crazy. You buy 10 properties and 18 drops to $14 a month. And I'm just telling you, $14 a month, if you were paying an inexperienced bookkeeper, it would be a good rate. But when you're paying a team of professionals and this is what they do, it's astronomical and it's entirely different. So by the way, there's a link below. Some of you are my partners that are actually watching this, and I want you to know that when you click that link, you get more information about my track record on 4,000 homes, having done hundreds of millions in real estate. And this is the system that I'm referencing right now that I use that makes all of this possible. If you're doing this on your own, let's actually step back for a second and say, what should you be doing if you're actually trying to figure out how to do this entirely on your own? If you're stepping into this world of real estate and you have only maybe 1, 2, 3 properties, I don't think you need a CFO. They're not gonna be $50 on the first property and $10 each. I have volume control because I do a lot of volume. The secret to winning huge in real estate is when you start playing the game really big. So you gotta actually ask yourself, how do I maintain my standards but lower that price? And you're gonna do that by finding a bookkeeping firm. These are people that don't even have to be certified accountants. They don't even have to have degrees in it. But you should look for someone that has experience in real estate so hopefully they don't goof it up. Or goof it up too bad, because I'm gonna tell you, I went through 4 different bookkeepers, accounting firms ramping up before I realized I've been doing it wrong all this time. I haven't been tracking it. These days, by the way, time out, just something I want to give you that's really important is that when I do the game of real estate, I actually have my accountants do the accounting and P&L, profit and loss statement of cash flows on each individual property, even though they're all in one LLC. So you set up your LLC, you dump your properties into it until you got about $1 million, and then you do individual accounting on each property. And then at the end of the year, you got to pay taxes, you got to pay for your accountant to produce your K-1. That's like your business's social security number status saying, oh, I have an LLC. It has a tax ID number, like I'm a human that has a social security number. I need to do taxes on me. The accountants, the IRS says you need to do taxes on your entity. And basically it'll say, wow, you bought 5 properties, you brought in all this income, these are your expenses, this is how much money you made. Oh, and because your accounting team properly recorded all of the tax benefits and write-offs, looks like you guys actually lost money. Shh, we made a lot of money. They're gonna say, here's a K1 to you and your partner. So I get one that says you lost money, you get one saying you lost money, and then we file that with the IRS with our personal return, and guess what? The IRS says, wow, you owe less in taxes even though your bank account technically went up. By the way, how mind-blowingly awesome is that? For just a moment, just think how freaking cool it is. Some of you, you're making too much money. That's your problem. In fact, if you're paying more than $1 a year in taxes, you need to own more real estate. One of my partners just came to one of my events here at the studios in my event center, and we had hundreds of people show up at our last event, and he came up to me and says, Kris, I bought all these properties. Guess what? How much I paid in taxes last year? He says, for the first time in 2 decades, I didn't pay a penny in taxes. Thank you for helping me do this real estate. Because it's one thing to make money, but it's another thing to save money. And in real estate, you should absolutely 100% be doing both. As a wrap up, something for you to be aware of if you're considering partnering with me, there's a link below that you can click and you can actually get with my team and be vetted to see if that's a fit. You might be in that process where I'm like, that's why you need to watch this video. And what you're gonna find is that it's $50 on the first property, 10 for each one after. And literally that is a pass-through cost from a third-party company. We don't make any money on that. It's stupid cheap. And that's really my philosophy in all real estate. There's fees everywhere in the game. I gotta pay my realtor, my loan officer, my acquisition team, my research team, all these people. So the game is play volume, pay as little as possible, win as big as you possibly can. Thank you so much for watching today. Click that link if you want more information on partnering. For the rest of you, hopefully that helped really enlighten your mind on what you need to know about accounting and taxes in the game of real estate. Share this video, subscribe. I'll see you tomorrow.